Eric Muadith, Muadith.com, with the weekend world market analysis for the weekend of September 12th and September 13th, 2015. Let's go straight to how Asian markets close here. We see a little bit of a down session pretty much across the board. We can see here that at least 1% on the Kospi. Japan was slightly unchanged, so was China. Hong Kong slightly down. And we see that the other markets were pretty much down for the day. Take a look at how European markets closed. And we see that again slightly down. We see that the French CAC was down 1%. The other markets were less than 1% down, but at least down for Friday's close. We take a look at the Americas with about 2.5 hours to close. And we can see here they are also down for the day pretty much. Brazil is down about 0.4%. And as I record this, we are looking at the US markets with about 2.5 hours to go. It is pretty much unchanged for the day in terms of all the major indices. Okay. Let's begin by taking a look at the Canadian market, and what we are looking at here without knowing the close. And what we see here is a little bit bearish in the sense that we've had about 2 to 3 weeks since we closed at 13,473 in the Canadian market, and I believe anything below that, after we've had 2 weeks above that previous weekly closing low, anything below that is the beginning of a fresh bearish move lower. In fact, it reminds me of this period here where a similar type situation happened, and we had at about 2 weeks above that close, and then we came back and cracked below that. So simply put, if the TSX is below 13,473.67, that's a fresh sell signal. If it can hold above that, maybe it can build. So I think this is developing to be a bearish looking chart. Again, the level to watch is 13,473, because below that it is breaking down again. We also see that this blue line was support on the weekly RSI going back a couple years. As of right now, it is not showing support. If anything, this has become resistance. So the Canadian market has a lot of work to do to repair this chart. If we take a look at the daily, we can see that the daily is struggling also, just like other markets. And we can see, and don't forget that we have a very steep 50-day moving average. We have a downward sloping 200-day moving average. So net markets are pointing down. And we also see that if you take a look at the RSI, you see that the market this week is stalling on this line connecting recent RSI highs. So until such a time when the market can move above this line, we have to assume that the markets are always going to resolve to the downside, and that's the risk. We can also see similar type resistance on the hourly for the TSX, and again we came back at the highs of the week and made contact with this red line and stalled. So until down the road when the market can clear this resistance, we have to assume that this market looks to go down. And short term, we can also see that as of right now it is moving below this wedge. Again, another indication that this could easily be where markets start tracking lower. As stated last week, the biggest problem here is that we are trading with the monthly RSI and monthly MACD trading at fresh 3-year lows. So if you're looking for a reason why this market cannot go up, is because it is still showing that it is trading at 3-year lows on the MACD and on the RSI. And also we see that the smaller setting MACD is already trading at 3-year lows. That's a major sell signal, and that is pretty much what is the problem in the current market. It does not look good when you look at the long-term monthly picture, month to month. Markets still showing that they could be trending lower. If we take a look at the Brazilian market by way of the ETF that trades in the US, the EWZ, we see here that the RSI is trading below 30.9, which is bearish, which might explain this move to fresh 52-week lows. And we are looking at the monthly, also showing that right now it is trading below 30.90 on the monthly, which is just where you might see a further erosion of prices lower. So the Brazilian market also looks like it is in a major bearish territory. As long as on the monthly the RSI is trading below 30.90, That's very bearish. Keep in mind, we already moved to fresh 3-year lows on the EWZ, and also we can see here that both MACDs are below 0, so they're trading below 0, which is very bearish on both MACD settings, below 0 and trading at fresh 3-year lows. That's the strongest sell signal you can find in any market. So the market here looks very bearish, and keep in mind, holding below that 30.9 level on the monthly is very, very bearish. Let's take a look at the French market, and we are looking at right now showing resistance at the 10-week moving average. Keep in mind, the 10-week moving average was support when the market was going high, so you can see support during this phase. When the market was trending nice to the upside, it kept above the 10-week moving average. And right now we are looking at the potential that the 10-week moving average is now becoming resistance, indicating a different type of market. On the weekly also, for the French market, we see the crossover, which is bearish between the 13-week moving average and the 34-week moving average. Just like we had a bullish crossover here between the 13-week and the 34-week moving average, which gave a signal that the market wanted to go higher. So right now, the pressure continues to be the downside. Now there's some type of hope here that this could actually hold on the weekly, and you're going to see this across many markets. If you take a look at a 5-year weekly for the French market, connect the lows on the weekly RSI, you see that they connect nicely to where it is right now, making some attempt to defend that line. As long as it is holding above that blue line, this is very good support and actually could stabilize the market, if not begin a nice move to the upside. So we have to watch for that. We also see that the other line, which is where it has been holding, this uniformity line here, is holding. Now that line was responsible for these lows. It held here with a double bottom support in 2012, again came close here and held during those lows, and during these lows here, every time it held for a multi-week move higher, came close here, it held, which is this lows, and now we are trading here. So as long as it is holding on this line, my thinking here is that this could actually be where it starts building, so we have to watch for this. Alternatively, if we break below those two lines, so a break of those two lines would indicate that yes, now the market is pressing and is committed to the downside. This chart does show some hope if you're looking for reasons to be bullish. Now if you go to the monthly, is where we see now on all these monthly charts, pretty much all of them are pointing to the same thing. The risk in this market is the MACDs and the RSIs. As I discussed last weekend, the risk continues to be that we are trading at 3-year lows or close to 3-year lows. The more we crack to 3-year lows, it's bearish. And again, you see that the MACD here looks to crack to fresh 3-year lows, and also the possibility of moving below 0 for the first time in many years. So that's the risk. So the risk is elevated. If the market can show support, for example, if the market can bounce on this red line and show support, or if it can climb back above 0 on the MACD, then we can look to go long. I think for now the risk continues to be to the downside because of the way the monthly charts are setting up. We take a look at the FTSE. Quick reminder, if you go back to videos that I made many months ago, we kept observing this resistance in terms of the FTSE as it kept making new highs on the weekly here, week after week. It kept on showing resistance on this level here on many occasions, and if you recall, we thought that this could actually not be a good sign, and that seems to have been correct. And so now we are off the highs at fresh 52-week lows. Keep in mind, next time you see a market making fresh multi-week highs and yet cannot move above a resistance line that is clearly defined on the weekly RSI, expect the market to eventually break. Now if you take a look at the weekly, let's go to a 5-year weekly. What we see here is the possibility that this could actually be support if it can continue building on the weekly gain for the week. So if it can climb above this line here, that might be good enough for support, but we haven't seen it recapture that green line. So this market continues to be questionable. Take a look at the monthly, and in the monthly, just like we saw in the French market, the risk is elevated for lower prices. And the reason why I say that is pretty obvious because of the major sell signal that we look for, which is that the MACDs are moving to fresh lows, 3-year lows, and also 3-year lows on the main MACD. And the main MACD could easily slip below 0 here, which is bearish. Of course, we see that we already broke to 3-year lows on the RSI, and that line became resistance. And we see that right now we are breaking to fresh multi-month lows. So the risk continues to be to the downside. If we take a look at the daily for the FTSE, we can see, just like other markets, the daily is struggling to hold the previous break line. You can draw it like that. So this break was responsible for this move lower. That break also led to a sharp move lower, and it has become a backtest failure for many markets across the globe. So that's the risk there. I mean, the problem here with this chart, it needs to be above this line, which is resistance. And until it moves above that line, I would expect this market to struggle. In fact, if you take a look at the hourly, you can see that the hourly has been struggling for quite some time on this level here. And it's a very simple level to follow. And every time the markets come here, it's seen short-term highs. Every break back below the red line there, so the market drop. And this week, at the highs of the week, we had uniform action above the red line, back below it. That was an obvious short-term sell signal. So I think this one has a lot of work to do if it has to repair itself. For now, we have to conclude that at the end of the day, the pressure continues to the downside. If we take a quick look at the German market, just like the other European markets, same type action. It needs to hold this line of support here. On the weekly, you can see that it bounced on this line. This line goes back about 5 years. So it needs to hold above that line. Right now, we are looking at the potential for a double bottom support. As long as it is holding above that line and building on that, it could have a chance of moving higher. Problem is that if it breaks back below that blue line, this could lead to a drop. And again, the risk is on the monthly, where we can see that the monthly is trading at fresh 3-year lows on both MACDs and also on both RSI and MACD. And also this move to below 0 is also a problem as far as the German market is concerned. Quick look at the daily, and we can see, just like we discussed earlier, the daily is struggling to hold above the previous break line. You can see it broke here, which is this break somewhere around here, and now it's become resistance. So as long as it is struggling to hold above that blue line, this line here, as long as it is struggling to hold above that, I would expect the market to be trending lower. Let's take a look at some Asian markets. We begin by taking a look at Hong Kong, which after a breakout attempt early on in the year, this breakout attempt, which was good, but after 1 month, nice gain, it just dropped over the last 4 or 5 months. Now the risk here, just like we've seen, and this is just a current theme everywhere, is 3-year lows on the monthly RSI, 3-year lows on the monthly RSI also moving below 0 is the biggest risk, indicating that this is, if we can call it what it is, more than likely a bearish market environment. And we can see that on the weekly, even though it had a nice gain for the week, we see that the RSI continues to trade below 30.90, which is just an area where markets don't tend to act well. And on the daily, just to repeat what we've been seeing across the globe, there was a break. We can say the break took place here. So that trend line break, let me do that afresh. So let's do that afresh here. So the break of the trend line, I guess I can draw it this way. This break here, late June, was this movement here. Markets haven't been back there, so we can draw a line from somewhere there. You can see that the market has been using this for resistance. It was resistance right there during this short-term high, and as of right now, this is becoming resistance. So day to day, we also see that this market is poised to stall. In fact, if we take a look at another market, this time we take a look at China on the daily, and without fail, it is struggling to hold the same level. So let's just draw it this way, right there. You can see the red line was support on the way up over since last October, and right now we see that every time we drop below the red line, prices have a steep drop. We dropped here again, which was during this period. We dropped here again, which was this period, and now we can see that we've come back to a level of potential resistance, which is right there. So we see that even in China, markets are showing resistance. Take a look at the weekly, and the weekly needed to find support. See whether we can draw that. The weekly had an opportunity of showing support right somewhere there. It needs to be above that green line if it is truly looking to move higher. We take a look at the monthly, and the monthly needs to hold 50, which is what it's trying to do. If it can bounce on the 50 level on the monthly, maybe it can start building. The reason why I say on the 50 level, you can see that ever since it jumped above 50 here and also moved to fresh 3-year highs, it went on a nice run. So this was ideally the best place to have gone long, which is during this month of July of last year. The market went on a major run. So now if it can continue holding above that green line, it could have a chance of building after a recent pullback. Anything below that would be bearish. If we take a look at the Kospi coming into Friday, this is the close on Friday. On Thursday's close, it was up about 20 points for the month, but after Friday's close, you can see that the Kospi did drop back and is negative for the month. All right, hope you can see that. So the Kospi at the end of Friday was down for the month, and so if we take a look at the chart, we see that this is showing a negative gain for the month. And so we go back to the observation that most markets across the globe are struggling to hold their monthly chart together, because we can see here already trading at fresh 3-year lows on the Kospi, and on the RSI and the MACD is just about to move to fresh 3-year lows on both MACD time frames. So again, the risk here is that this market eventually, after an attempt to hold, is still struggling, and I think over time the risk is for lower prices. If we take a look at the Kospi daily, remember it was down on Friday about 1%, so it's down. This is Thursday's close, so on Friday it was down, which makes a lot of sense because it came back to test this line here. This break at the beginning of May killed the rally for 2015. Market's been down since, so we can draw a line, a uniformity line like that. This is where it's been stalling. You can see it stalled here with the double top on that red line, which is this high here. It stalled again on the line, which is this high, and we can see with Friday's close and Thursday's move lower, it is showing resistance on that line. So there's a lot of resistance. This or the Kospi will not be able to move higher until it clears this red line where it has been stalling. Until it can clear that level, the market will continue to stall and trade a little bit down, if not a lot to the downside. If we take a look at the Nikkei, we can see in Japan we had this 7% move. So this was a 7% move in one day. You don't see those a lot in markets. But if you take a look at the RSI, pretty much did not mean much. Number one, keep in mind we are trading below the 200-day moving average, and we are trading below a downward sloping 50-day moving average. Now, if you take a look at the RSI, you'll see that it stalled exactly where it needs, even after the 7% gain. Take a look at this line showing a backtest failure. So this break right there, middle of August, was that movement which led to this drop. We haven't been back there, and we see that this has now become resistance right there. So on a day-to-day basis, we see that even the Japanese market is struggling to hold above obvious lines of resistance on the daily RSI. And so, to put this another way, it needs to be above this line. Before it can move above this line, there's no need to be looking for long side ideas. Otherwise, this market is going to be pressed to the downside. Let's take a look at the Nifty. We can see the Indian market also showing the same type of resistance like other markets after the break right there. This time about towards the end of August, right there, that break, this break level corresponds with this RSI breakdown, extend the same line, and we can see that there's daily resistance on that line. So the Indian market is also showing short-term resistance, indicating the potential for lower prices. If you take a look at the monthly, here, we can see, just like we've seen in other markets, the biggest risk is that the market could actually continue cracking to fresh 3-year lows. As you can see here, this is the risk that it cracks below 50 and to fresh 3-year lows. We can see that one of the MACDs is already trading at 3-year lows and also moving below zero for the first time in many years. So that's the risk, that this market stalls. If we take a look at the weekly for the Nifty, we can see that off the lows here, which is towards the end of 2011, early 2012, this movement here in the RSI began this nice move. Market's been making higher highs and went on to record a nice gain over the subsequent years or the following years. So we can draw a line from there to see where the market did and has been finding support. So here, that's what I call the uniformity line. Every time it touches that line with uniform action, it bounces. Uniform action on the line support, it bounces high. Uniform action here, below the line, back above it with uniform action, nice lows, and recently we touched that line here for these lows. So right now we are looking at a market that has been unable to recapture back above the green line. The more it trades below the green line, the more this market, in my opinion, over time is also poised to go lower. Keep in mind, we have now, just like other markets, crossover between the 13-week moving average and the 34-week moving average. This crossover is bearish, as you can see here, which might indicate over time the market might coil lower. The last time we had a nice crossover in the Indian market, it was bullish, which was here, late 2013. Crossover between the 13-week and the 34-week moving average led to a nice move higher. Right now we are looking at the prospect of lower prices based on this chart. Take a look at the hourly. We can see on the hourly, Indian market's been struggling around this level here. So let me show you that, somewhere there. As you can see, every time we stall here, we get a pullback. We stalled here again, we broke below that red line after trying to move above it, which was those highs. Resistance on the red line there, which is this high. And this past week or so, over the last 2 weeks or so, we've been showing resistance on that line. So clearly, until the market can clear that resistance line, my thinking is that this market trends lower unless it can move above that line of resistance. As long as we are seeing resistance, I would expect this market also to be pointing to the downside week to week, month to month. If we take a look at the Australian market, and we've seen this across many markets, once we broke below that line, you can draw it this way, or you can connect recent lows like that. Both point to resistance. Market was unable to move above that RSI line, which might explain why Thursday it was down about 2%. So this is becoming resistance. Until such a time that the market can move above that line, I would expect this to be moving lower. Keep in mind, we are showing that the market here is trading with the 50-day moving average pointing sharply lower, and the 200-day moving average is pointing down, which indicates over time markets are looking to go down. We take a look at the monthly, and we've seen this everywhere, is the fact that the MACDs and the RSI are trading at fresh 3-year lows, and that's risky because that indicates that it's a broken market that should actually probe lower prices in the coming weeks and in the coming month. If we take a look at the South African market, we can see here that it is about to make a move to fresh weekly closing lows, and the level here to watch is 1590.89. So anything below that is a fresh move to fresh weekly closing lows after 2 weeks of rest. So that's a problem. And keep in mind, this is very similar to what we saw in the Canadian market, also moving to fresh weekly closing lows there, as we discussed at the beginning of the video. So that's bearish. You go back to the South African market. This market, in my opinion, was one of the first markets to move to fresh 3-year lows, which was, at the time, it was the first one to do so. and we started suspecting that this is indication of world markets pulling back. This market seemed to have been predicting where markets were going worldwide. We see that the RSIs and the MACDs continue to trade at 3-year lows. This is not good for world markets, and I want to conclude here by taking a look at the Dow in the US, and we see that the Dow here is still trading at 3-year lows on the MACD and on the RSI. So the risk here is lower prices, even though markets are doing their best to try and recover. So watch out for part 2 of this weekend's market analysis video if you want some ideas and for more ideas as far as the US market is concerned. So log on for part 2. EricMuadid.com. Good luck, peace, and blessings. I am out. Woo! EACS. Yeah.